So, welcome to our webinar today, the CFO's Guide, Reconnecting with Your Finance Function. Really great to have you all on today listening. My name is Rachel Jackson. I'm an accounts partner here within Gravita, and I've been here nearly 3 years now. Previously, I worked in one of the big four companies. One of my things is really being passionate about working with SMEs, and that's part of the thing is called today. So we'd just like to, first of all, introduce Russell, and then we'll make a start on the webinar.
Thanks, Rachel, and welcome everyone to today's webinar. As mentioned, I'm Russell Frayne, so I'm the Director of Transformation here at Gravita, but also I lead the outsourced finance service line as well. I'm an accountant myself, very much been part of working with owner-managed businesses for well over a decade now. In terms of today, I'll just cover off the agenda. So we're going to cover off where outsourcing makes sense and the options that are available to you. I'll run through a high-level case study of a recent outsourcing opportunity that we've had with a client, setting you up for success, and we'll then pass back across to Rachel to talk about connecting with your accountant and how we join up as a service line across both parts of the business. If you do have questions as we go through the webinar, please feel free to drop them in the chat or the Q&A. I'm not sure which boxes you can see your side. We'll monitor both our side, but at the very bottom of your screen, you should have a chat or a Q&A function. Drop any questions you might have in there. We'll either pick them up during, if we can, or we'll pick them up at the end. But do please feel free to ask any questions at any time. So Rachel and I have run this session a couple of times now, and we've surveyed about 40 CFOs with regards to reconnecting with their finance function. So there'll be a few of these screens throughout today's webinar. And the first question that we asked them was, how often do you actually review your finance function? Because a lot of the times this is something that's so easily overlooked when you're running your business. You're in your business, you're running it, and you're focusing on the deliverables and the operations day to day, and you don't take the time to zoom out, I suppose, and actually review your finance function as a whole. And that is like how you operate as a finance function and finance team. So the results were actually really positive from the CFOs that we polled, where the majority of them, over 80%, were reviewing every single year. Now, when we drilled into that a little bit further, they were reviewing aspects of their finance function. So it wasn't reviewing everything every single year. And some of those are how we then actually deliver those services and those sort of processes within the finance team. There was one really honest person who said they've never reviewed their finance function. And the caveat is there, they were right at the beginning of their sort of journey, which is why I always like to overlay that as part of the overall story when we look at business lifecycle in a moment. Now, what I think is always useful to do at the start of this is to look at what outsourcing actually is, because people interpret outsourcing as very much like different things. So for me, it goes into 3 buckets. And essentially, this is being able to delegate specific either finance functions or processes to an external service provider. So that could be an outsourced finance provider, very much like Gravita. We have an outsourced finance team that deliver full BPO end-to-end processing for our clients. That could be a service specialist. So that could be something like outsourcing your HR service or legal team and things like that. And then there is the other consideration, which is offshoring. So using a third party, but a third party that is in another country, normally somewhere like India, Philippines, South Africa, or somewhere like that. So as we're talking through, just want to bear that in mind, but there are sort of 3 lenses to this, and there is no necessarily one size fits all for you and your business. Now, as I start to overlay the business lifecycle here, you will all be at very much different levels of this sort of business maturity. When we were surveying the room previously, we had quite a good split in the room and in the virtual room last time, where we had quite an even mix at either end of the spectrum. So they were either starting or in, and then we had a bit of a mix in the middle between growing and maturing. And the reason why I like to overlay this is because when you're looking at your finance process, and when I talk about finance process, it's everything from your finance function, your finance team, but also how you interact with your accounts and actually your statements of financial records at the end of the year is really sort of different depending on where you are. It's quite daunting at the start because you're multitasking, you're dealing with everything. And a lot of the time, that sort of bringing an accountant in early is often overlooked because it's seen as a cost at the start. And all these things are costs ultimately. But where you really set yourself up to succeed at that sort of start is being able to get that sort of really clear advice and guidance at the start to set you up to succeed. Now, from an outsourcing perspective, we've recently ran a
survey,
a report on our website recently around, does your first hire have to be a hire? And the reason why we did that is because we have quite a few conversations where people look at hiring their first person often probably too early, but sometimes they're hiring a person to do a multitude of different things. And when you're looking at outsourcing, the big win in outsourcing is that you're actually bringing in specialists that have a wide range of knowledge and access to additional knowledge and skill sets and specialists as well within the business. So it offers you a very quick route to market. It means it's very flexible and can grow and scale with you. And a lot of the time, it's actually a cost saving because you can turn this on and use a small part of outsourcing compared to bringing in a full head FTE on a full annual salary, where you're having to pay them regardless of whether you're using them or not. So that startup piece is often very overlooked, but it's one that is really important. The next phase is that growth phase. And as you start to bring in your first hires, and ultimately you are going to be hiring in that growth phase, it's being able to scale very easily and turn on and turn off functionality, but also having access to talent, as I mentioned before, those key specialist areas that may be really difficult to hire, but also in your business, it might be quite niche and a small part, and it might not constitute a full hire. So it does work and allow you to sort of scale up and scale down as you start to go through that growth phase. And we see a lot of clients turning on and then also subsequently turning off certain functionality as the business starts to change and evolve through that growth phase. As we start to go over the hump now and start working towards where a mature, established business, you've got really clear ideas on the structure and running of the finance team and your finance function, it allows you to start then focusing on things that are like more strategic. So stepping out of the doing and focusing on like how the business is being run. And again, looking at things like risk management. Are we de-risking certain areas? So a lot of businesses, when they do get to that sort of well-established, mature structure, a lot of the time you end up with bottlenecks or you end up with key senior people that if they were to leave and exit the business, then it's a real risk to the forward. So being able to have that flexibility and again, within a team that is fully scalable allows you to step away, de-risk your business and be able to focus on other areas. And then finally, we've got a grooming for exit, or that's a declining, scaling back piece of your business. It's that ability to focus on those key objectives to exit your business. The ability to be more agile in exit. So you may need certain scopes of work that are undertaken, can absolutely help and lean into that as well. But also if we are doing the inevitable cost cutbacks as well, it allows you to be able to reduce your costs in certain areas whilst at the same time not impacting the business. So the reason why I always cover this off is because it is absolutely beneficial to any business at any stage of their business life cycle, but it's very much with a different lens for each. But what I wanted to get across today really was the way that this can start to scale and support you all the way through that business. And a lot of the time people go straight for hiring and recruiting, which brings me on nicely to the next phase. In the survey, there are always things that lend themselves to outsourcing first. So the question that we asked the room was, what do you outsource? And this was quite reflective of exactly what we do see operationally and how we kind of see business owners dipping their toe into outsourcing. Things like payroll, which is a specialist service and it affects a small part of the business, but in a big way, because if you get payroll wrong, you get a lot of noisy stuff. So you really want to make sure that you get that right. Payroll we normally see is normally one of the first things that people outsource. Unless you're a large business, having a single FTE in the business delivering payroll is often way over the top, unless they are doing additional ancillary services as well. The other things that are really key that we always see outsourced is things like your purchase ledger and your sales ledger and the reconciliation between the two. So whether it's raising, posting your sales invoices or whether that is, owned and managed by the business, but that reconciliation of who owes you what, being able to chase up outstanding debt and surface that information to you to help you improve your cash flow is absolutely a thing that outsourcing lends itself to. And the other section is processing your purchase ledger, so your accounts payable. Everything from purchase order, the purchase invoice, to payment, to reconciliation at the end. All of that sort of manual process that's repetitive and really lends itself to sort of scale and automation. Then absolutely, those are the sort of key areas that we do see offshored and outsourced a lot. Other things in time, and the room very much was around management accounts, anything a bit more complex are things that aspirationally you very much can get towards. But I will chat through in a moment with regards to the case study that we're going to run through with regards to how that client has approached from their management accounting forecasting perspective, because that's something I would say is like a phase 2 or beyond type process, where there's definitely services that lend themselves more to outsourcing than others. So let's talk about those options that are available to you. The first route, the easy route, usually is just employ somebody, whether it's full-time or part-time, depending on your needs. But when you've got that full-time equivalent headcount in your business, you can do as you like with them, really. You can deploy them in lots of different areas of the business. They could be a jack of all trades. They could work in a specific area of that business. But when you're looking at the finance function, as it's sort of evolving and developing and growing, do you need that person, that headcount right from the start? Or is that aspirationally a future hire in the right type of role to add value to your business? Now, a lot of the time when you employ somebody, they know what they know, right? Like you've hired them with the skill set that they have, and it's very difficult for you then to sort of expand outside of that unless you're going to hire more people with more and growing skill sets. So where outsourcing really helps with that is, like I say, being able to tap into those specialists without having to scale through more and more headcount in the UK. A lot of businesses go down that route, and it's for obvious reasons, right? It's comfortable, it's safe, it's what they know. I'm just here today to show you what options we've got available for you. At the other end of the spectrum, you've got the full offshore model. So there are a lot of SMEs, owner-managed businesses that just offshore a lot of their process. And they do this themselves, right? So they have arrangements with offshore providers, whether they've got a full-time equivalent or whether they use a pay-as-you-go model. You can be quite flexible offshore. Where it works really well is where you've got a service level agreement in place. So who does what, where, when, and how makes this work really well. If you don't have that and you don't have that established currently in your business, then it can fall over very quickly because they're in the dark more than if you had somebody in the UK working on this with you as an employed, staff head. It does give you access to a wider knowledge base. Again, you can tap into additional resources and services they offer. A lot of these offshore providers not only do things around finance, but they do things around admin, company secretarial things, they do HR services and all sorts of other things as well. So you can start to use them for other areas of your business as well. And it does allow you to scale. Like you can turn on and turn off those services offshore. Now, I would flag always from an offshore perspective that you need to do your due diligence and be really clear on the provider that you're using. Do they meet your needs? Do they meet the criteria? Can they help you grow and scale as you go forward? And from an economies of scale perspective, pricing wise, like the more you use, the cheaper it will be. Your buying power is going to be limited. So who you go with, who you can sort of work with might be limited. Now, you can, of course, build a hybrid model. And there's a lot of businesses that do that as well. And ultimately, the benefits here are the right work by the right team. You've got the best of both worlds. You've got your UK skill set, offshore skill set and resource, dial up, dial down, get the right people working in the right way. But again, you then have to manage this. So you have to put a lot of time and a lot of effort into getting this right, establishing processes, who oversees who, check-ins, updates, working relationships. And that takes a lot of time and effort. And a lot of the time, the hybrid model, people kind of steer away from for that reason. Now, where we would kind of come in is that outsourcing model. So whilst at the same time, yes, we do work fully with a service level agreement. So the selection of services that you want to work and outsource within the finance function can absolutely be delivered in a clear way to a service level agreement and delivery model. Full access to those wider skill sets and scalability that we talked about before, but in terms of having to work with or manage wider teams, that's taken away. We have established offshore models, we have established offshore providers and ways of working. We deal with all the check-ins, we deal with all the ongoing management and training and upskilling, and it allows the due diligence work to have already taken place and get the best of both worlds. So you've got UK staff as well as UK resource delivered with the flexibility and scale of offshore. So we can really dial those services up or down depending on what your business needs. And a lot of the time people look at the two ends of those spectrums and they miss those two parts in the middle. Now, the big question around that is that's fantastic. And everybody always then says, okay, I get all this time back in my business. What do I do with it? So when we surveyed our CFOs, we asked them, where would you focus your time if you had, more time freed up in your business. And this was very, very consistent. When I've spoken to business owners in the past, these sort of four themes always come up. They would spend more time working on their business and less time working in the business. You start as a business owner doing something that you love, or it becomes what you're really good at, and you grow and scale, and it becomes this monster of thing that you never thought it might have become. But at the same time, you're still in the detail. You're still so passionate about your business. You're delivering these things on the ground. And a lot of the times you just need to zoom out and look at your business through a microscope. And having that time back in your business absolutely allows you to do that. And that's not just looking at things like the finance function. This is looking at operationally how you're running your business, moving into new markets, expanding your product range, or just looking at a whole host of things like how can you make your staff happier and things like that. So the strategy, growth, efficiency, and control, these are all common themes that we see across the survey, but also when we talk to our business owners when they're looking to try and free up their time in the business. So the case study I want to walk through, it really encompasses a lot of this really. So we had a conversation with a new finance director and they had a lot of problems. They didn't trust the numbers. They had resourcing problems. They had a management accountant going on to maternity leave. The turnaround of new business, management information was taking a long time. And they wanted to open new locations. So they were expanding. They're in 3 territories already, but they had aspirations to move into more. And originally, I was asked to fix a very small scope of work here. But what we had the conversation around was actually currently everything that you're doing in this finance function is very messy. And also, how are you going to manage this in terms of you've got people going on maternity leave, you've got staffing problems already, and you want to open into new locations, but you don't have the fundamentals right here. So we expanded this a little bit more and said, whilst we could fix your first problem, all of the problems that exist in your business will still be there. So we repositioned the question as the first question wasn't the right question. The bigger question was actually, how can we help and improve you to get the most out of your finance function? And what that essentially looks like was a whole piece of work around the processing and structure of their team, who did what, where, and how. And then we documented those SOPs to understand exactly what should be done and what works best together in a joined up way. Now, they didn't want to explore an offshore model. We explained to them how that would work, and they just said, we don't have experience in delivering an offshore model. The whole team are on the UK. In the other territories, it's really ran from the UK team, and we don't envisage, having, offshore teams for each of those locations. It will all be run from within that UK team. So with that off the table, we positioned our services with them, which initially was just around covering maternity leave, but then it expanded into actually the way things are being done today. And when the person from maternity leave comes back, they wanted their finance team to be in a much different place. So we've taken the work that we talked about earlier on, that repetitive manual processing work, and we've taken all of that away from them, brought it in-house, and we've moved that to our offshore providers in India. And we're now processing their information daily through different tools and different processes, but we've retained the review and judgment of that information in our UK team. So we work with the offshore teams to make sure the information is clear and concise and delivered in the way that it should be within the UK. And then we also work with the client's team in the UK in an aligned way to make sure that the deliverables are as they expect. All the reporting, the outputs are then kept in the UK. Now, in terms of longer term, is that necessarily the way it would structure? Possibly not. The reporting and outputs could absolutely be delivered elsewhere, but we wanted to make sure that we just kept that end-to-end process nice and clear with a segregation in the middle whilst we established those best ways of working. So flip that on its head. We started off with, we could do a thing which wouldn't fix all of your problems. All of a sudden, we've opened them up to a new world, a new service, and a new offering. That means that we can cover them when they take on the maternity cover. We can support them afterwards so they can dial back on some of those services when the management accountant comes back. And arguably, the management accountant is going to come back and do what she should be doing, as opposed to what she is doing today, which is all of that manual work as well. And she's totally swamped and overbearing with it. And it's now fully scalable. So as they start to look to go into new territories, this whole model is, turn on, turn off, dial up, dial down, and it's a cookie cutter approach for each of them. So going back to those 4 areas of what is the client doing now? They've had some more time back. So they're focusing on their forward budgeting. So they're getting clearer forward forecasting models now. They're looking at their cash flow, joining this up with the account side of the business. The only complexity really in this team was their deferred revenue considerations. So just the way that they work and they sort of age and defer their revenue based on their sort of delivery model means their cash flow is really key because they need a good forward visibility on that cash flow. So that's where they're spending a lot of their time. They're expanding into that new territory early. So they're moving into Dubai, and it's literally a lift and shift of operating model and just filter it straight back into that sort of delivery team at the moment, and looking at the spending management controls. So really being able to dial into where they're spending money, where they can make savings, but also from their account side, like how are they accounting for this sort of information in order to get the best presentation of the data at year end as well. And they've never had any of this, by the way, previously, and this just gives them the time back to be able to do that. So in terms of getting this right, and I've got a very short checklist on the left-hand side, you can see it on the screen. But in terms of getting this right, I do like to sort of go through the layers to make sure that you get this right. And this is whether you're doing a UK model, an offshore model, a hybrid model, or working with your outsourcing team, is that you really need that clear understanding of what you want to outsource. So what parts of the finance function would that look like? Is it just basic data processing? Is it more specialist services? And what do you want that outcome to look like? Is it, increased capacity?
I think we've just lost him. I guess let me jump in first while Russell finally comes back and hopefully brings the slides in. But the next thing I kind of wanted to talk about, and we haven't got the slides there, but I'll just kind of talk from the top of my head. So accounts and outsourcing work really closely, and I think one of the key things that I've always thought about is, an accountant is for life, not just for Christmas and year ends, and that's something that I'm really passionate about. The whole communication is like so important. The number of times that we'll be talking to clients and they'll be like, oh, we've done this or we've done that, or actually, we were considering various options, but we haven't done the different options. So it's much easier to have these proactive considerations, because then we can be having proactive communications with clients and yourselves and the CFOs to basically talk about the various accounting treatments that might happen depending on what options you're picking. So quite often we kind of come and it's a done deal and this is what we've done. And then we go, right, well, that's fine. We can bring this in. We'll put it in the accounts. We'll support on accounting treatment. But actually that upfront comms is so important. And I think one of the things when we were looking at what sort of the CFOs, well, we ran various surveys, a lot of them, oh, there we are, got some slides back. A lot of the surveys were around strategy. They were around, giving you some time back in the business to actually think about what you wanted. When we talked to all our CFOs, these were the really important things of what we wanted to understand. So they wanted things that were proactive. They wanted some advice. They wanted support. And that might be just to listen. It doesn't always have to be support on the end of the line of it's just somebody sometimes to talk through and sense check. We're all professionals. It's really useful to sense check people sometimes with what things are thinking about, and just listening on the end of the phone and going, actually, that sounds like you're making all the right things. You're thinking about the right things, but have you thought about X, Y, Z? We see such a lot of different things with various clients, and we see things publicly and presented. And I think just being able to pull on that experience and support each other is so important. And that whole value add piece, that's why everybody wants to work together, isn't it? They want to provide value. We don't come to work to do some disclosures and tick that box and go home and be like, yay, that's gone really well. We want to be making those value add things to our clients, which is so important and is so appreciated by CFOs and various professional finances. So if we just move on to the next slide. Okay, so this was, yes, my strap line. See, I did manage to remember it. Accounts are for life, not just for Christmas and year ends. That's just so important. And I think that two-way dialogue as we all work together and really benefit from the history and knowledge that we've built up over time is so important. These are the things that came out of the survey. People want some insight. They don't just want some sort of tick box exercise, checklist, disclosure driven around Companies Act and away we go. They want it to be thinking about and making it specific to the business. Things like partnering with energy, wanting to share that information, being passionate about what you enjoy and how you can be supporting, and bringing latest guidance into life for clients and for CFOs. Meaningful management accounts, Russell touched on that a minute ago with the variance analysis and making sure that it's actually what people want. Sometimes on outsourcing and management accounts, people provide information because that's what's always happened. And sometimes it's so useful to just sit back and go, actually, what do we want to drive this business? What are the KPIs that we really should be thinking about, and getting those so that we've got really good ways of measuring the results of them and being able to give some informative decisions. Ownership and quality obviously kind of goes without saying, that's absolutely what they want. I think if we could just go on to the next slide. I was kind of sitting back when I was thinking about this webinar, and obviously we have done it 2 or 3 times now to various different, one was on face-to-face, one was on another webinar, and then obviously this is another webinar that we're doing to our clients and CFOs and various other people there, was to sit back and really think about what were the really important things to me as I work as a professional, and not just about being an accountant in Gravita, but we are all really, really busy people. And I think the key thing is, and what Russell's touched on today, is one of the strap lines I'm really passionate about is getting the right people to do the right work at the right time. And I think if we can do that, that can all help everybody to be really focused on what's important to them. They've got, confidence that work's being done in the background, and it does enable you then to go and think on about the strategic things that people should be thinking about in their business. So that ongoing partnership, that real safe space to discuss ideas and impacts. Now, obviously, I do need to bring into the fact that it will be different clients or on different sort of business life cycles of where they are. And also, we've also got the audit independence rules. So where we have got clients that are audited, or where you are dealing with your accountant who does your audit as well externally, you just need to be mindful of those audit independence, because we need to be careful that you're not getting dragged into things where you're seen as making management decisions. So I think, parking aside the audit independence where you have got your audit, I think if we think about the ones where we're not auditing, that ongoing partnership and safe space to discuss ideas are just so important for future of where sort of people are going. Access to that wealth of resources and specialisms, really goes without saying. And some of these touch on a few places, but if we think about the lease accounting, the new revenue recognition standard that's coming in imminently, whether to early adopt, whether to not early adopt, having these proactive conversations with clients so that they can think up front if they are starting to think about a big lease that they might be considering going into, and it is an operating lease, maybe thinking about the terms and conditions of it, and just making sure that you're not entering anything into anything now which actually might impact your accounts for the future in a way that you don't intend them to. There's lots of accountant firms at the moment are doing sort of lots of webinars on lease accounting and revenue recognition. Obviously, we've done one, and we did one as a cross-service line. So we actually had an audit partner on there, we had myself on there, we had a tax partner on there, and we actually kind of touched base on all the different implications it might bring. And that proactive upfront conversation and dialogue is so important. So if anybody wants to go look on the website, that's there, and it's just worth a thought about some of these kind of things. But that's just such a great sort of access to wealth of resources and specialisms. And there's so much out there to be reading about. Sometimes it is nice just to go to one place and be like, right, what is it I need to know? Simplifying often complex to straightforward and easy to digest content. I sit on lots of conversations with clients and tax, and tax colleagues are so knowledgeable and know so much information. And it's so good sometimes to be able to sit and listen to them, but actually then be able to put it into perspective with the client, of actually using the historic knowledge that you've got with them to actually make it very easy to digest. Things can be really discussed in detail through the accountant and with the tax advisor to actually get to a really solid position where everybody understands how it all works. Future fit, the support and accounting policy choice is so important for so many reasons. Making sure you've got solid accounting policies that are compliant with UK GAAP or IFRS or whatever framework you're using is so important. Whenever you're on that life cycle of your business, you might be looking towards an exit strategy. You might be thinking about setting up, growing into certain markets. You might be looking at a new revenue stream. Thinking about those accounting policy choices and actually breaking them down, especially with the new standards coming in place, is so important that you're chatting to your accountant about things like that. Informative KPIs. I work on a lot of accounts preps that are audited either internally by Gravita or externally by other audit firms. And, KPIs, I always think it's one of those things that they're like, oh, what KPI should we put in the front of our accounts? Actually, they should be thought about all year round. The KPIs that you put as your disclosures should really reflect the KPIs you're using in the management of the business. That's why they need to go in there, because to the readers of the accounts, they're really, really important. What do management see as being important to this business? What are the evolving KPIs? Are there new KPIs coming through? And obviously, working with lots of different clients, we do build up a lot of experience of different KPIs that different businesses might be using. So, really thinking about those KPIs and discussing them with your accountant is just really important. Definitely thinking towards your accounting framework, if you are looking to go AIM listing or different sort of, where you might be looking at, are you part of a bigger group that uses IFRS accounting? Thinking about what is the right framework that actually might have started off that, 102, FRS 102, 1A was perfectly fine, but now you're part of this big evolving worldwide group, actually would a move towards transition towards IFRS actually be more, more valuable to you? So thinking about these kind of things and definitely supporting on all stages of the business life cycle. And that's something that, I really enjoy working with CFOs and different people as part of my job on that. The whole technical guidance, I think, I'm an accountant. I think these are very exciting. Obviously, some people might not think they are as exciting, but the new developments and impact that are coming through, the thresholds changing on audit, the other things that they're looking at, the filing of all entities going through software packages, actually even like companies that are reporting under parental guarantee, section 479A, all these things Companies House are looking at. How do they make more and more technology to using and getting insightful information from their clients and from the accounts being put up at Companies House? Things to do with IXBRL, HMRC are constantly increasing the tagging on what's required on sets of accounts to make sure that they are collecting data, and they like to do lots of comparisons and they like to give some insight into markets and different sections of the market who are working on different types of entities. So I think we will see this more and more that they're starting to do things like this. I think talking through timing and implications, the upfront discussions on those, like when HMRC are going to be doing this, when Companies House are going to require X, Y, and Z, just so that everybody's got in their mind where it's going, they know what they're doing. And I think it brings a much more calming environment. Then you actually go, right, that's all under control. And actually, now what am I doing in my business? How am I moving this forward? So I think the good examples of best practice seen in the market are a great way that we can be sharing with clients and really adding value. Obviously, the accounts are all publicly available of clients and signed. So I think, just if you're working in a financial services market or the property market, just those kinds of examples are useful. I think the key thing for me when you are connecting with your accountant, with your finance function, with your offshore provider, with your outsourcer, and Russell touched on is just all about the communication. The communication two-way, not just one time a year or anything. That ongoing, every so often check-in is so important. Having the ability to then stand back and just say, actually, where am I in my business? Do I need some different support now? This was fine at this point, but actually now I do need to dip in and out of a bit more support around that. And I think, if we think about just that regular dialogue about what's coming up through technical guidance and what's happening in the market. So I guess that's kind of what I wanted to. I've obviously lost Russell, which is thank you everyone for listening. I don't know if there are any questions in the chat that anybody's got or wherever they might be coming through. Can anybody see them? No. So there aren't any questions at the moment. So all I would just say is thank you so much for listening to us. Apologies that we lost Russell. Obviously, some things happened there. It's been really great. And I hope some of the things have at least resonated with you with what I've been saying. Obviously, we'd love to hear from you. So there's our email addresses. If you'd like to dip in on the website and have a look at some of the things that have gone on there might be something useful that might sort of resonate with the things that you're facing at the moment. But thank you very much. And thank you for your time. I know it's precious. And thank you very much.